If you own an SUV in the UK, or you are shopping for one right now, this will save you from a financial catastrophe. Dealers are hiding the truth. Owners are trapped, watching values collapse, while repair bills mount, insurance costs become astronomical, fuel economy claims are lies, and battery failures create double repair nightmares. Some dealers are now refusing hybrid trade-ins and calling them unsellable complexity disasters. We identified 6 hybrid SUV models you must avoid or sell immediately before total value collapse. Here is what you need to know now. Emma's experience with her Range Rover Evoke P300e captures the new reality for hybrid SUV owners in the UK. After just 18 months, she walked into a dealership expecting to trade up, only to be told her car was worth £4,500 less than the outstanding finance. The Evoke's average depreciation now sits at 22% in the first year alone, far above the premium SUV average. For Emma, that meant a £7,000 equity gap on a car she believed would hold its value. Direct Line's insurance re-rating added insult to injury, bumping her annual premium by £380 and pushing the cost of keeping the car even higher. MOT records show 6.2% of Evoke plug-ins fail early on high-voltage system codes, double the average for petrol SUVs. The promise of a green Range Rover has turned into a financial trap, with owners like Emma stuck between negative equity and spiralling costs. James, a BMW X3 xDrive 30e owner from Manchester, found out how quickly a hybrid's complexity can become a liability. His battery failed at just 23,000 miles. The warranty covered the part, but the labour bill alone came to £8,200, an eye-watering sum for a car that had already lost 34% of its value in a single year. LV responded to the surge in high-cost claims by moving the X3 into a higher insurance group, raising James's premium by £460. MOT data flags the X3 with a 7.1% E-code failure rate, the highest of the group. For James, the hybrid dream collapsed into a cycle of repair bills, lost value and rising insurance, leaving him paying extra each month for a car he no longer trusts. The Volvo XC60 Recharge brings a new kind of risk, a double repair disaster. At Volvo Fix, an independent specialist in Glasgow, one owner's 2023 XC60 suffered a battery management system failure at 22,000 miles, followed by a motor gearbox seizure just 6,000 miles later. The combined repair invoice reached £10,620, more than some petrol XC60s lose in 5 years. AXA has now lifted the XC60's insurance group, pushing up annual premiums by £420. MOT data shows a 6.8% E-code failure rate, confirming a pattern of early high-voltage faults. Owners are exposed to both combustion and electric failures with no relief from warranty or resale. The result is a car that promises the best of both worlds, but delivers a relentless series of financial shocks. Across these 3 models, the pattern is clear: rapid depreciation, insurance shocks, and repair bills that can wipe out any perceived savings from running a plug-in hybrid. Owners are trapped in negative equity, facing costs and risks that escalate with every year. And for the next set of hybrid SUVs, the financial and reliability risks only widen. Mercedes launched the GLE 350D as the hybrid for families who wanted everything: diesel range, electric savings, and a luxury badge. But beneath the promise lies a financial trap. Hybrid Tech Coventry's files tell the story of one owner who faced a £20,700 repair after a battery module failed, only to see the inverter and motor break down months later. Labour alone reached £8,400, with specialist rates now exceeding £70 an hour. Mercedes dealers refused these jobs out of warranty, pushing owners into the arms of independence. Aviva moved the GLE to Insurance Group 4 in February 2024, after loss ratios broke 110%. Premiums spiked by £560, and with 31% annual depreciation, a £34,000 loss is not theoretical, it is routine. MOT records confirm the pain. 4.5% of GLE hybrids require battery repairs within 50,000 miles, the highest in the segment. Audi's Q5 TFSI-E entered the market with the promise of German reliability and plug-in efficiency. Instead, it has become a symbol of auction panic. British car auctions data reveals a 34% drop in hammer prices since 2022, erasing £32,000 from some nearly new Q5s. On 11 June 2024, a 2-year-old Q5 scraped just £8,600 at auction, £4,000 below the seller's finance settlement. Insurance under Admiral now sits at Group 2, but premiums still rose by £350. Battery claim rates are 2.9%, and owners face weeks-long waits for parts. Dealers warn that Q5 plug-ins are nearly impossible to move, with one franchise manager admitting nobody wants to take them in, too risky, too complex. The Mitsubishi Outlander PHEV, once Britain's best-selling hybrid SUV, now traps mainstream buyers in a different kind of loss. Zurich's re-rating in July 2024 pushed premiums up by £340, and 24% annual depreciation means a £28,700 hit for 2023 buyers. Battery-related claims run at 2.4%, but the real threat is the equity gap. Hundreds of Outlanders sit unsold, with trade-in offers far below outstanding finance. Owners are told to just keep driving it until it dies. Dealers will not buy them back. For families who trusted the Outlander, the reality is a car that is both unsellable and unaffordable. Across these models, the losses are systemic. Mercedes, Audi, Mitsubishi, no badge is immune. The hybrid promise has delivered triple complexity, triple disaster, and an ownership trap with no easy way out. The collapse in value across these 6 hybrid SUVs is not just about faulty batteries or unlucky owners. It is the result of a toxic brew of government policy, broken warranty economics, insurance panic, and a supply chain stretched to breaking point. When the Treasury ended the plug-in hybrid company car tax break in March 2025, the annual £2.3 billion cost of the scheme was simply too high for what ministers called overstated carbon dioxide savings. Suddenly, the main reason businesses and high-mileage drivers chose these SUVs vanished overnight. Sales dropped by 5% in a single quarter, and the used market was flooded with ex-fleet vehicles, each one dragging prices down for private owners. Dealerships saw the writing on the wall. Internal memos from Lookers and Virtue reveal formal trade-in refusals, citing negative equity and warranty claim costs that run £1,200 to £2,300 higher on hybrids than on petrol cars. That extra burden gets passed straight to the owner, especially as most warranties barely last 3 years. Once the coverage ends, specialist labour rates, now topping £70 an hour, turn even minor faults into 4-figure bills. Parts delays, especially for high-voltage modules, strand cars in garages for weeks. Insurers, facing a spike in loss ratios, Avivas for the GLE 350D hit 112% in 2023. They responded by hiking premiums, an average of 28% across the board. For owners, that is an extra £320 to £560 a year just to stay insured. Meanwhile, Chinese EVs with simpler drivetrains and longer warranties are flooding the market. Auction data shows hammer prices for the 6 hybrids down 33 to 37% since 2022, as buyers chase newer, less complex alternatives. What began as a personal finance headache has become a systemic market rout. The result is a perfect storm, where individual losses are driven by forces far beyond any owner's control. Owners of these 6 hybrid SUVs face a clear crossroads. The evidence is overwhelming. Waiting will only deepen the financial hole. The single most important step is to sell immediately, before another wave of depreciation or a major repair erases what little value remains. List the car now, even if it means accepting a painful loss. Price aggressively below market averages to attract buyers while there is still demand. If the car is on finance, request a settlement quote and compare it to real auction prices. not inflated dealer part exchange figures. Do not wait for the next tax change, insurance hike, or warranty expiry. Every month you delay, the gap widens. Before selling, get a battery health check from an independent specialist. A documented report can help reassure private buyers or justify your price. If the battery shows signs of weakness, disclose it honestly, because hiding faults only leads to returns and further losses. For those unable to sell due to negative equity, consider refinancing with the shortest possible term and set aside funds for likely repairs. Avoid sinking more money into upgrades or cosmetic fixes. These rarely add value on the resale market for hybrids now seen as unsellable complexity disasters. Shoppers still considering one of these models should walk away. Do not be tempted by cut-price deals or low-mileage examples. Instead, stick to proven alternatives. Consider full petrol SUVs from Toyota, Mazda or Honda, or established electric models from Tesla or Kia. Focus on total running costs, not just headline fuel figures or tax perks. Choose a single, simple powertrain, either petrol for reliability or electric for future-proofing. The worst investment in the UK car market right now is a plug-in hybrid SUV with a shrinking buyer pool and a reputation for triple complexity, triple disaster. Right now, these 6 hybrids bleed tens of thousands in value, unsellable, uninsurable, and undrivable at true costs. Dealers want nothing to do with them. The smart choice is now the worst UK investment. Do not wait for disaster. Escape the ownership prison while you still can. Share your escape stories below.